The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a great weekend. Man, it's getting chilly again. Is it snowing in some places on the eastern seaboard yet? Boston, are you guys getting snow? Maybe somebody can tell me. It's supposed to be, man. I think it's supposed to be less than. My goodness, I was joking. You are getting snow in Boston. Unbelievable. It's in the 50s in Clearwater this morning. It's in the 30s here, which is kind of amazing. I think it's supposed to be less than freezing, south of freezing tomorrow morning, which. Everybody tried to get a head start on their gardens this year around here. I heard not big spring plantings in the fields, but just regular vegetable gardens. And I think everybody's going to get whipsawed on that one. Let's take a look at the indices profile heat grid really quick. Man, this is a weekly, this is a daily. If you guys have gotten the latest download for this, you'll see some new features. Well, I was so tired. We're trying to make this ease of use. And by the way, the next upgrade, it's a real simple upgrade too. This one allows you to save settings, which any normal platform should offer you. I got to admit that. But we put a couple of extra bells and whistles on saving layouts. But you'll have a more customizable situation next upgrade. That'll happen really quickly because it's pretty easy to do. But and again, this is a function of user response, I guess. This time it was my user response, but I was kind of sick and tired of having to kind of traverse back to the future section or find the index itself to try to get we give kind of a tie to the marketplace. I love Basil's terminology there. I stole it from him. With these net breadth calculations, and if you're just coming onto the show, you know that if we're going to the S&Ps, you know that. Oh, excuse me. If you've been watching this show, you know that some of these calculations are based on some simple. It's not calculus over here. We're just trying to look at how many stocks are trading above, within, and below profiles, and we do a breadth calculation on that because if we're net imbalanced on the north side, there's a reason for that, and that's, in my opinion, as it has been lately, a reason to kind of look at this market from a buy the dip scenario and buy the breakout scenario. We haven't been talking about shorts in a long time. In fact, we were looking at. And again, this is our kind of S&P line chart down below. And isn't it wild how you can't exactly figure out the price using this software, but you see the visuals and their real-time updates on the visuals? It's a pretty cool way to get real-time updates, and what we call them, and what Bloomberg's lawyers have called them, are real-time price derivatives, and that's why we're able to kind of give you guys real fast signal updates, if you will, on this without anyone having to subscribe to exchange fees globally. We're covering that, of course. So as we look at this, you'll notice that even back in, let's see, what was this general area? Started crossing into negative territory back mid-December on the S&Ps, had a little bit of a downturn, and then we kind of got breath positive on the weekly mid-February, but we had gotten some hints of some turnarounds, a little bit, little bit before mid-February. And that was also in a relative sense with what was going on in the globe. And, we looked at the China situation. We looked at some of the other things going on, the political environment, whatever. And the Brexit thing was going on, which seemingly has just kind of disappeared. And that's coming up in June. And the oil situation, commodities slow down, blah, blah, blah. I mean, our market had generally weathered that storm very well. And then when we had the internals start to show, and when I say internals, the internals of the S&P 500, the 500 stocks looking at a net breadth calculation turn around. I mean, we just haven't really looked back, and that imbalance state has really stayed in force here on our intermediate and long term. So that being said, being able to look at this in the index profile heat grid, being able to drill down obviously into that sector really quick and look at some of the internals, and also being able to grab a chart really quick, landscape chart, multi time frame at one time, and then being able to look at the chart itself, and of course the breadth calculations, and a look at the profile cell structure. Those are all things that I think in a one-time quick view, you get a lot of information off this screen when you're looking at some of the global situations out there. And we've got 17. I don't know what I just did. I hit something over here. We've got 17 indices right now on this, and we're apt to add more if you guys can think of more indices out there that you'd like to see. All right, so as I want to get into the S&Ps immediately, but before we get into them, we got to hit a couple other things out there, and we're going to take a look real quickly at the dollar and the euro. Here's the euro situation, green across the board, guys. Here's the landscape view when it comes to the euro, and we are slightly above that old weekly unfair high now. So let me show you that. Let me go into our charts within eSignal here. Why can I not? Well, my screen. Okay, here we go. God, that was scary. Okay, so as we look at the euro, we're going to pull it up really quick. And again, we closed above this 110.43. Still don't have it. Let me try to get it here. You guys see my screen now? Had that close above the 110.43. I haven't been a big fan of being long the euro, but we had that close above, go back and retest. This is our long term. And we've actually kind of closed above this former unfair high here at 113.52. Now, when I say close above, we got a close last week of 113.94, and we've come back and retested 113.57. So again, we're paying attention to that inflection point for a reason. I'll tell you why when we come back. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were trying to hit the euro before we got on the break there, finish up with that. But, you know, what I wanted to say, if you've got our indicators, that's great. And why is my scanner not working? Well, okay, this is locked up. Okay, there we go. So, man, what's going on here? It's like the world's connectivity is weird now. That thing that happened with TFNN last Friday, that was awful. But, you know, it seems like those types of things are happening more often now. I mean, we've got a co-location site. We've got a lot of equipment at, and everything's cloud-based these days. And, you know, our information was actually locked up there for about, it was over a 24-hour period. It was a cyber attack and some kind of big backbone issue. And then TFNN, last Friday, I forgot to mention this, they had a big backbone issue. I guess it was a Verizon type thing, but man, it just seems like it's happening more often. So when I have my screen freeze up, I start thinking cyber attack now. Anyway, so as we look at this profile, if you have a chance to look at our indicators, this is not showing in the scanner's current cell structure, but if you go back in the scanner and you pull up the euro here, and I'll pull up the chart, and I go to the weekly. Cyber attack. Come on. What the heck is going on here? Let me try to retrieve this chart again. Thanks for bearing with me. Here we go. Okay, here we go. All right, so here's the weekly. And if you'll notice, you can mouse over that last profile and get that 113.52 that I'm showing in e-signal. So we give you a decent little history here to grab some profiles. So, and the reason I'm doing this is because I want to show you. The first thing I want to show you is there's a big, long profile vertical or horizontally here. It was in force from September of 2015 until February 2016. So the length of these profiles really make these inflection points a bigger deal, if you will. So when we kind of come up into these numbers here, close above, and you're going, wow, there's no current profile to close above. We're looking at this profile that had a really big impact because of its length before. And that means that that particular inflection point is going to mean more, for instance, than a really short profile. And we'd probably be ignoring a profile that wasn't in force that long from history. But you've also got a hole in the marketplace back here. And Joey and I talked about this 125 area, the unfair low on a former weekly unfair low. And there's really nothing in the way here. There's no balanced areas between, generally speaking, 114, 115, and 125. So you've got to watch out for that. And, you know, I've been passing on the longs on the euro because I'm just not a fan of being long the euro at any point in my life. I'm just not interested in being long the euro. But technically speaking, fundamentally speaking is what I was saying. But technically speaking, we have had some breakages of rules here for the first time in a long time, being that close above the 110 43, go back and retest, and then move north for the first time against profiles. So as we look at this, I'm going to pull up my e-signal charts again. As we look at this, there's that hole in the marketplace. And if you look back in time, I mean, this was when we had that break below 135.52. It's like that number sticks in my mind big time. And, you know, we've never had a close above profiles until recently. So, and we've had a close above this pretty long profile, longest one I've seen in a while, and go back and retest. So it's not the time to be short the euro. And it was not the time to be short the euro from above 110.43, by the way. So you're still not seeing a lot of reasons to get short this thing. And when we look at the daily, you know, I'd like to see at least the ability for this to have a new profile on a daily and being able to break that. So we would at least have some intermediate reasons to be short this again. But right now, you know, the dollar's getting hit a little bit, and we want to pay attention to that. I want to go back to it a little bit. And, you know, the technical damage was done on the dollar. I'll show you this really quick. Closing below, getting back, trailing down. Tom's been talking about this for a while. But, you know, here's the most recent move that go back and retest 96.22. I think the unfair lows on the weekly were 97 and some change. Let me just check that. That number is 97.75. So, again, not a lot of reasons to get long the dollar, and therefore, at the same time, considering what we just said about the euro, not a lot of reasons to be short the euro, and this could widen out even farther. So, again, the euro hasn't gone too high, and it's not a shortable instrument, in my opinion, right now. All right, did I drag that out long enough or what? Here we go. So, as we go back into, we're going to go back and look at the S&Ps, but I want to just keep covering a couple of things we need to talk about first, and then we'll have some statements about the S&Ps. This is, you know, back in the, I guess since the year 2000 started, you know, sitting at a trading desk, and you know, myself included, a lot of my friends just like, the notes, the bonds, because every one of them has been thinking these things have been too high. Things have been these notes and bonds have been too high, and the rates have been too low, and they want to catch these historic turnaround moves. So the constant comment was always, the blanking bonds, you know. And I've heard it literally hundreds of thousands of times, and it's the same situation. The blanking notes and bonds. So they've gone up again. We talked about this 129 balanced area that we had to get back above the unfair lows. I haven't been a huge fan of shorting these things. And right now, the weeklies, this is what we're looking at. We've climbed pretty seriously back into the fair auction here. Here's the daily. And if I can get my thing to work here. Here's the daily. Here's the most recent breakout above 129, then cleaning and clearing above 129.12. Has this thing gone high enough to be able to look at it from the short side? Here's the 240s. You really just don't have that indication in place. Plus, the U.S. stock market, we're going to kind of relate this when we come back from the break, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Waiting for Mason to come back up. So we were finishing up, talked about the euro, talked about the U.S. dollar a little bit. We were looking at the notes here. Excuse me. And I just want you to kind of remember this. This is a really good lesson, I think. 129.02 weekly unfair lows, 129.12 daily unfair highs. There has been, at the very least, if you kind of follow what we talk about all the time, there's been a zero reason to look at this from the short side as we started getting past these hurdles. So again, what this information does for me is it blocks out one side of the marketplace and only allows me to go long here if I have to put on a trade. So when we look at this, again, it kind of keeps me from doing things like, selling things that are too high or buying things that are too low. This really makes it pretty clean and clear, and it allows me to play some defense. And all this information is in the scanner. I'm going to show you really quick. So as we go into the future section, there's the 10-year down there. And there are those inflection points we've been talking about. These are in decimal form. We can't put these in fractions for these treasury instruments. I guess we could, but it's going to flip out the database. So again, these are in decimal formats. You can keep a little calculator to look at the fraction conversions here. But that's the 2 cents on the 10-year. And what we were going to talk about is, as we look at the S&Ps, obviously the S&Ps seemingly feed off of these dovish comments and lower rates without question. But, what I've noticed and what might be the trade here is, as we look at these S&Ps continuing to find support when it's available. I mean, if you look back in time, we break out. We had that turnaround getting out of the 17 and 1800s, by the way. Breakout, go back and retest. A little bit of shakeout there. Breakout, go back and retest. A little bit of shakeout, breakout again. The breadth has stayed positive during this entire transgression of events, I guess. Find support, new profile, find support, explore the entire fair auction. Breakout, find support. New profile attempting to appear. A little bit of a shakeout there. But again, I mean, the general concept here, and even when we pulled back the other day, what was this, on Friday, reached a low of 2035.25. I'm sorry, excuse me, 2035. God dang, my charts are weird this morning. 2035. Sound like a broken record here. 2035.25. As you look at all this, yeah, I mean, is that a place to play defense? 2047.50, those unfair highs, absolutely. And I look at these dailies primarily for my major inflection points that I look at, and I look at the 240s to kind of regulate it. But getting back into the profile, it's okay to stop yourself out and get back in it if we go back above. Or wait patiently until we find a lower number. So how does this relate to the 10-year? And how do you trade this maybe more efficiently? I'm looking at the 10-year as at worst going sideways if we have a market pullback, or even if we have a market climb. So if we have a market tank, that 10-year could go, parabolic in my opinion, and the targets could be met to explore the entire fair auction on the 10-year. And I know this is crazy to say this, but I mean, we could even see 132 on the 10-year, and that would cause rates to just go into a death spiral. So again, we haven't explored this entire fair auction. We don't have to, but the S&Ps being on their highs and the 10-year going up at the same time, and I think at worst spinning sideways if these S&Ps continue to go higher. I mean, Yellen's going to keep a bid in the marketplace on the 10-year, and they don't want these rates seemingly to go higher right now. So, making sense of what should happen is kind of dangerous. You have to look at the relationships and look at the action, and it is what it is. And maybe you're right theoretically in the long run, but in the short term, you've got it. It is what it is. This market is priced by bids and offers. Always remember that. This is where the market is, and it doesn't have to be any different. Please remember that. I've gotten into major trouble by not remembering that. So here we go. Let's take a look at gold. All right, so we're looking at gold here. And, you know, I talked about possibility of looking at 1232 as support the other day. And again, that's just been kind of damaged. And we have reached again. God, my charts are just sticking here this morning. Here we go. Low 1209 on Friday, and then we're kind of languishing down here. So again, is it time to go long gold? You had a chance last week. Reached a low of 1206. We talked about that in a wide profile, that POC sitting there. And that's something to pay attention to. We talked about that even before it happened. And 1245 was that upper limit. But right now, you don't have a lot of leverage to trade gold. So, you know, we're below profiles on the daily. That 1232 seemingly is a little bit of a resistance area. And I don't see, you know, if you're going to trade gold, you've got something to play around with at 1203. Now you've got 1232 on the upside. So that envelope, if you will, is those pressure points are the only areas that I would pick any battles. And I'd be more inclined to trade closes above 1232 right now from the long side. We got to hit gold really quick, or we got to hit crude oil. If we can get it to come up here, we're going to look at it in the scanner really quick. Terry, I completely hear you. The comment for you guys not in the den: markets can stay irrational longer than you can stay solvent. You know, that's, again, I was saying that in a very philanthropic way almost before. What Terry just said in the den, very true. You know, no matter how much they don't make sense, that's the market. And I mean, that's where the price of the market is, whether it makes sense or not. And that's what we have to trade on as traders. So looking at WTI crude oil in the scanner, you can see this. We're below profiles again, below 39.62. Had that 240 error down 18. We're going to talk about that in a little bit as we look at the May contract in crude oil. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And as we look at the scanner, we're going to talk about crude oil really quick. Somebody in the den pointed out we have a new profile on the weekly. We're going to get into that. But, what does that mean? If you look at this 41 means in this cell structure kind of analysis. And by the way, if you guys have suggestions or comments or things you want to see or indications, features, what have you, just send them in. I mean, my email, we've got a whole help desk mousetrap to deal with incoming problems and things of that nature, but email me directly. I mean, if you've got some ideas that you want to see in this scanner that are not in there, obviously there's a ton of things that we can put in there. If you look at this, and let me pull this chart up again. We're showing a new profile here, and we've got a double bar on that weekly right now. That's going to get cleaned up. But if you want to see new features in this scanner or new concepts, just please email me. If we've got a situation where we can enhance a current feature also, just, let me know about that too. Here's the chart on the weekly on crude oil. What I was doing was I was focusing on the daily. Here's the daily. Okay, John from Philadelphia, I'm just going by what the current continuous contract is. I hear you. John from Philadelphia is saying might want to start looking at rolling to June. So here's the situation on May still, though. We had that kind of break and go back and retest. And this is a great example of being able to, if you're looking to be long crude oil, it blocks out that side of the marketplace for you. So it was only a short situation. And why is that the case? Because we had broken down on the daily and the weekly, and there's the weekly. This was last week's action, by the way. So as we look at this week's actions, now you've got something to play defense on if you want to nibble on the long side. I think there's a little bit of a trading opportunity here, but this is not the most powerful trade in the world because you don't have a lot of help from these dailies at all, as we had referenced. So that era of 49 down means we've pretty much been in a protracted for 49 straight weeks or 41 straight weeks recently by defined downtrend of what we look at on that scene. And even though we're coming into an unfair low on a weekly, we're still in that so-called defined downtrend. And by the way, you've got a conflict in profiles here for the most part. Is there a trading opportunity right now around 36.50, 36.58? Yes. Where's your upside targets right now? Your upside targets on a trading bounce. I don't even think they're 39.62. I think they're actually, you're probably looking at something like 37.72. That's the 240 situation here I'm getting ready to show. So there's, we usually explore these 240 balanced areas. So that will be the target above 37.72, but not the most powerful trade in the world here available. It's just a trading opportunity. That's the way we're looking at crude right now. All righty. So, had a little. Let's see here. I get my screen straightened out again. Going back to our ETFs, this energy sector hadn't been performing very well. This is our daily. You guys are probably aware of that. We're going to go back into this energy sector while we're talking about crude oil and look at some opportunities here. So, again, if you feel like there's a possible, and again, these are short-term trading opportunities we're talking about right now. If you feel there's a possibility of a little bit of a bounce in crude oil and you can play some defense around that 36.50 area with not a lot of upside, I might add right now, you got to take a look at some of the opportunities within the scanner here. I'm going to pull up SWN. I think this is Tucker's mentally married to this stock now. I'm just kidding, Tucker. It's actually a really cool little stock to trade. All kidding aside. Okay, so here's the daily. Here's the weekly. Still sitting above those profiles. And here's the 60 minute. So price, generally speaking, between 770 and 8 on yesterday's close. Actually, Tucker, I'm a huge fan of looking at this stock from trading from the long side when it's possible. I think this stock in general, Tucker, it's put in a bottom. It's been nice to watch. It hadn't reacted incredibly well on the upside, but again, I think it's easy to play defense on this particular instrument. So, and again, it's still showing it's one of the stronger stocks out here when it comes to profiles. We've had this stock was trading what? Was it trading sub $6 for a while there? HP, that one is let me look at this one. Oh, we've also got some help here with the 240s. Let me take a look at this. Yeah, so HP, this is our daily. This is our weekly. Now, this is an interesting little opportunity, in my opinion. You've been above profiles in the weekly. You got a new profile. You had a profile appear last week. And again, this is not reflecting Monday's prices. You had a profile appear below price action. That's bullish in nature. All right, and that's great because that's a long-term profile action happening there. You pull back right into, with crude oil pulling back too at the same time, you pull back right into that weekly unfair high, and here's the daily. Why are these charts? This is... Come on. Let me restart this chart. I'm losing my mind. Here it is, HP. Here's the daily. That 55.54 unfair high on the daily is very coincidental with that 56.16 unfair high on the weekly. So, if we're looking at crude oil playing a little defense below 36.50, and if we get any pops at all in crude oil, HP may give you a little bit of a trading opportunity on the long side. And this one, looking at the two different profiles, I am not understanding why that's not working well for me. Let me go back to eSignal for a second. Let me pull up HP. Here we go. So as we look at this weekly, that new profile appearing below price action, that's bullish as we look at it. Here's the daily being right at the top of the profile. You've got a really good trading opportunity on this from the long side. But the good news is you know where you can orient stops. Might have a decent risk reward on this one. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So we were looking at a couple of stocks in the XLE that might be decent little opportunities. Again, play defense always. HP was the last one we looked at. We're going to go back into this thing. There's the HP chart. And a couple other stocks that might be on the board here to look at. We're going to take a look at this one. Let's take a look at Cameron International, CAM. Let me look at COG. How did that end up doing? COG and CAM. Let's take a look at that one because COG is kind of a blast from the past, but let's take a look at Cameron International. Well, why is this not going up? Have we got the wrong stock in here? I'll take a look at that. We'll come back to that. COG, let's take a look at COG. Okay, so this is one that's shown some pretty extreme strength, and this is what you want to see in the face of any pullbacks in crude oil. And this is one where we're looking at the dailies here. So again, breakouts above 22.96, 23 are to be bought in this particular stock, in my opinion, especially if you're getting rallies in crude oil. You got big time support around that, around 21.19. That's weird. Huh. We got the wrong symbol in there? I don't know what's going on with that, Cameron International. Let's take a look at another one here. And we're gonna just kind of surf around to see which ones are sitting at inflection points here. Let's just look at okay, Marathon MPC. The reason I'm looking at this one is because we're above profiles. This might be pretty interesting. MPC. Okay, so this one again, 36.32, top of the profile on the weekly. Looks like we don't have any prints this morning yet, but sitting right at the bottom of the profile here on the daily. So again, you're kind of coming down into weekly unfair highs, daily unfair lows. This one, give yourself a little noise factor. If we get any pops in crude oil, you could get a little bit of a move up in this stock. Again, I'm not looking for any major moves in any oil stocks. These are trading opportunities, in my opinion. Okay, let's go back into the scanner again. Let's just look for kind of those particular type setups. Schlumberger, Let's take a look at Schlumberger anyway. SLB, slob, as we used to call it. All right, so this is one that's performed relatively well. You've got a POC on the weekly here, but again, I'm looking at this as, hadn't really had a big downturn with crude oil coming off, and we're sitting at the bottom of a profile around 72.14. You could get a little bit of a pop in this one. Your targets, again, looking at crude oil, if we get to 37.72, I think that was our target today on crude oil. That's what you're going to have to look at. Again, looking at a little bit of a trading opportunity on Schlumberger. Guys, stay tuned for Larry and all the hosts on TFNN, and I think we'll be up all day. We'll be back tomorrow. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.